The Hedgeless Horseman here. I thought I'd say a few words about today and what we're seeing, and you know, some thoughts about how or why this sector is so hard, and a lot of the, in my opinion, mistakes people do. First off, I put out an article today talking about why this sector is basically so hard from us. I mean, from a human perspective, since it's so irrational and so, you know, since like now, for example, during sentiment downturns, aka a bear leg, good news doesn't really get priced in. No news gets punished. Bad news gets really punished. So at face value, it's a lose-lose type of game. Basically, we're at face value, we're taking on exploration risk, for example. And if we're lucky enough that a company puts out good news, we might get a reward. But it's much more likely that they actually put out, let's say, neutral or okay news to bad news, and then we get, typically really punished. So again, at face value, it's like playing a game of roulette. You're betting money, and if it hits black, you lose some money. If it hits red, you lose a lot of money. Which is why this sector is probably one of the most frustrating ones, simply because it's so sentiment driven. It's not rational at all, not efficient at all. We go from extreme euphoria to extreme pessimism, and during extreme euphoria, we get rewards for little to no risk or unjustifiably high rewards. So that's the flip side of the coin, basically. I brought up the example of Garibaldi Resources, which went up to, I think, 400 million in market cap in 2017 on drill speculation. I don't think a single assay was out yet. So you can imagine, how things can change, and that's the important thing. Things always changes. There will be a period of time where you will see junior miners go up hundreds of percent from the current valuations on little more than a shift in sentiment. Well, with that said, I mean, there are a lot of juniors that have done good work, so the value has kept increasing, but the price has gone down because sentiment got that bad. So they have obviously more reason to revalue higher. So it's not like they haven't done anything and it's just sentiment. It's just that it is sentiment that make these one-sided markets, that during a leg up, most of our mistakes, let's say, are forgiven. Even relatively bad news might be forgiven by the market, and people come in to buy a 10% dip because it's the only junior that's down that day, while in reality it should perhaps be down 30%. And the key thing obviously is to stick around for both ends. What most people, I think, do, especially given the commentary I see on Twitter, basically, a lot of people whining that, they're down since, this period in time. Well, okay, but you wouldn't be down, if you bought here, obviously. Sure, it wouldn't be nice to see this downtrend, but they always seem to be complaining that they're that they're down, like this is a terrible sector. And you gotta ask yourself, okay, that's probably because you buy when it's super easy, when everything is going up, and your mistakes, gets plastered over, band-aided, and then it starts to be, a bad market where let's say, the game is rigged against you, where almost nothing the company can do can revalue the stock higher, for example. And then here finally you tap out. This sector isn't working. I mean, my junior, I think it's, come out with a lot of great news, whatever, if you're lucky to be in one of those stories. And it's simply not working. Why do I even bother? And then they sell out. And of course, I mean, nobody is selling down here, especially up here, uh, because of value. The only commentary I see by people who are like, scared right now, and in one way justifiably so, because I mean I found myself today. I was gonna add in a stock, and I just, I saw the action. It was down, 5%, and I was like, you know, it could go lower. So I mean, I write and think about this all the time, and I get affected by it as well. But then I, let's say, catch myself like, okay, if price going lower is my main fear, then I should be buying, because in my opinion, the rational thing is to be afraid that you're overpaying for something that should go down and stay down. That's overpaying for something. That when it reaches the fair value might be down here and you bought here. But if you're buying something here, or not buying something because you're scared that it might go lower and it's actually worth something along these lines, that is, a very human but irrational fear, obviously. Because it's, one of these days it's gonna revalue to fair value, and when we go into, especially like this sentiment period, we're gonna overshoot fair value. You better believe that. And of course, I mean, when gold breaks all-time highs, etc., fair value is gonna, go way higher than that. Uh, but just looking again at this chart, I mean, I have, like I said last week or so, I mean, it might sound weird that I'm so bullish, but at the same time, I've been saying that I expect another breakdown. But I mean, if we look back here, I mean, that's typically what has happened. This marked the exact bottom. This is when the short looked horrible, and that's what people keep saying in every junior room right now. Encouraging others to sell or not buy because the short looks horrible. It's like, okay, that just tells me you never bought low in your entire life. How does this short look good? How does it look good right here? It's like capitulation selling and an undercut of support. No trader is buying here, but that's obviously when, it's the best time to buy. Again, assuming that value is actually up here somewhere. If value is down here, obviously this whole period would be a bad buy. But I guess the important thing is, like, most people, they get in when it's super easy and everything goes up, like we recently saw in the uranium sector. I guess, I mean, I'm not following uranium, but all over Twitter there was, I'm buying this, uranium is going to the moon, and then everything went quiet. And I mean, from what I can see, I mean, it's a good case for uranium, but that speaks to how it is. I mean, when things are easy and juniors just go up, I think actually, uranium went up a lot, so it's not like it only went up without any fundamental improvement. But people get in when it's easy, when everything is going up, even if they buy the biggest shitco around, it just keeps going up. And that's how they think the sector is, and you think you're super smart, etc. Then you go into the period when nothing works, when every good news, gets sold off, bad news gets punished, and again, it feels like a rigged game. You're taking on risk, but you're not getting any reward for the risk. Who would play that? That's insane. So, on one hand, yes, we're playing a totally rigged game. We've been playing a totally rigged game in hindsight. Over this period in time, and this period in time, and this period in time. But the thing is, again, that if you only participate in the last stages of the good times, and you basically tap out at the end when you can't take it anymore, when you can't take the market basically saying you're wrong, dumb, stupid, and the short saying it's going lower, and everyone saying it's going lower, then you tap out. Okay, well, then you just stuck around for a brief period of the good times where everything, the odds were skewed in your favor, where companies could, come out with, neutral or slightly good news, and they would still go up. If they come out with good news, they went up a lot. If if there was excitement around like Garibaldi, for example, or Novo's Karatha discovery during the same year. I mean, they went up like tenfold on like speculation and excitement, and I was a part of the Novo journey, obviously. So I mean that just shows that when excitement etc. gets going, when sentiment is good, you're gonna see movements you can't believe right now, because now a company can put out a 100 gram meter discovery hole and it doesn't get revalued. But I still expect. I mean, there are some supports here that looks juicy. I mean, I thought actually this was the actual bottom. Well, we haven't closed under this yet, so I mean, I guess there's a possibility. But there's like, I mean, this blue line one could say is a support. It actually, I mean, the interesting thing today, GDX was very strong early in the day. Gold was absolutely hammered, -2% or something. Silver was absolutely slaughtered, down 4 to 5%, and GDX for early in the trading day was green. So that's also a very different, let's say, behavior, because this is the candle last week where GDX was up 6%. I think SILJ was up like 9%. So that's a candle I haven't seen since maybe the peak here or something. Maybe that. So that was a change in behavior, that there were, market participants, there were enough buyers and lack of sellers to see GDX up 6%. So that's a break in behavior. And today it was a break in behavior to see GDX that strong. Since I assumed that GDX was gonna, I mean, given how it traded over this period of time, I expected GDX to open, -5%. And it opened neutral or something, and actually for a while I think it was like slightly green. That's incredible relative strength. So something seems to be happening here, that we're running out of sellers and the path of least resistance is turning to the upside, because otherwise I don't think we would have this kind of candle, and I think we would be totally slammed on a day like this. So something's up, I think, but I still expect it would be so easy when we're so close to break some support levels as well, like they tend to do at the very end of these long consolidations. So again, I expect that. I expect and I hope that, because that's going to make the next move even bigger, because this is, if it breaks down here, for example, that's going to put in the traders on the short side, or even more on the short side, I guess. The last weak hands are going to sell, so we're going to be out of sellers. Traders would be wrong-footed, and then they turn it up. So that's how you get these rocket boosts. Basically, there's no seller to sit on the price anymore because they're all out, and then there's only potential buyers left. So I think we're running out of sellers, and I think mostly that, actually, running out of sellers, and if we break some more support, that's gonna flush out the last ones. GDXJ, very interesting in my opinion. I mean, if you look at these bottoms, they're kind of similar. Let's say a gap down and cascade selling, followed by a retracement to 0.786, and it forms like a head and shoulders, even though this is actually a low. It's not a top pattern if it's at the low, really. But bink, bonk, bank, and then up. Same thing here. So it's like a W, I guess. Same thing here. Almost to the exact same retrace as well. And wouldn't you know it? There's support formed here, broke, support here. This actually didn't really break. I mean, this was a break of this support, but it actually didn't break down. So, but now in GDXJ, it's actually ahead a bit of GDX, because this looks like, I mean, this is, one could argue, being support. Let's say this area. So we're actually on the way of breaking this, and that's something I like to see, because that's gonna, every person in the forum and Twitter and every trader, every investor is gonna throw up if that happens. And I think it's a good sign, actually, because if we see this this late in a down trend, it's gonna, I think, be the final flush. And the important thing to note is that when people ask me, is like, how can you be bullish? You've been bullish for, months now, etc. It's like they're offended that because they don't understand it, I guess. But I've been long, 100% long. I mean, since 2015. This was an even worse correction than this, but this feels actually worse for some reason. It feels like, the sentiment levels down here. The simple reason I continue to be bullish is that I see a lot of, especially gold juniors out there, that have no business trading where they are. If their valuations made sense, nobody would be stupid enough to actually go out and look for gold. Nobody would spend the time and money to have a long shot of finding something, if at the end of the day they find something and it is not worth more than what it's priced at in the market today. So no brainer. The valuations don't make any sense at all. If they're correct, we're not going to have a mining business. I don't think so, especially given that producers are actually have been producing near record cash flow over this period of time and are flush with cash, etc. So no, it's just, common sense tells me not, to be bullish, because these levels are unsustainable. They don't reflect reality of how hard the business is and how hard it is to find a mine, and how hard, and increasingly so hard, it is to actually put a mine into production. The supply picture is getting better and better every year. We take up more metals from the ground than we put in production. So macro-wise, supply side great. Macro, tailwinds for gold. It's not like the financial system is getting better and better. It's getting worse and worse. So it's like the macro picture, absolutely fabulous. Valuation even better, because these are just crazy prices. And of course, it's one thing to invest in GDX and GDXJ. There's not a lot of growth, let's say. A producer eats up its own future. So if a producer here, for example, didn't really find a lot more gold, they've just been, decreasing the value of the company. Because if they had a mine life of, 10 years, they should only have a PE of 10 if they don't have, if they don't have any exploration potential. They obviously do that, but this is not. I'm not investing in mature producers that have little in the ways of actually growing their value and depleting their value at the same time. So that's one thing. It's like I use this for to gauge sentiment, etc. But in no way, shape, or form am I super bullish on GDX or GDXJ, and I'm not bullish on trading sardines like Bear Creek Mining either. Well, now I guess I am. Now I wouldn't really have a problem buying trading sardines. But this is also a thing. Like I see people all the time. How can you? Down here people are screaming like, sell, sell, sell. It's gonna go lower. It's gonna go lower. No point in buying. This doesn't work. I'm down, 70% already. Nothing is working. This is the shittiest market ever, or shittiest sector ever. And let's say someone like was bullish here, and increasingly bullish for months, like it feels like I've been, and they, people basically, don't understand. It's like, how can you be bullish? How can you be bullish? Because if the sentiment is changed, which it always does. Just look at these tops. So let's say you bought here. That would be a 200% return. And if you sold, you would give away a 200% return. Look at how the returns go exponentially up with a declining price. If you bought here, And if you manage to actually buy the or sell the top, that's a 600% return. And there's almost nobody that would be buying down here because short looks horrible, beyond horrible. And the market has been telling you that you've been wrong for, well, 4 years straight. If you stuck around even longer, that's even more. But just because you bought here, that's not an excuse to be selling down here. That's just giving away. Okay, sure. It's going to take a lot to go back to this level because it's not the best case around, let's say. But again, it's like take the flash crash here. Okay, bottom 240%. If you waited for, that's what I see all the time. It's like waiting. People say, no, I'll jump in when the coast is clear. I'll jump in when the trend is up. Okay, so when do you de facto know that the trend is up? That's kind of, would it be, let's say, here, but then it, trips on resistance and you get scared to death again, or maybe here, and you're like, yes, okay, we broke out, I'm buying. And then, okay, this was a flash crash, but then you get, kicked in the teeth. Meanwhile, if you just focused on buying low, it's like, yeah, I'll buy down here. Oh, well, I'm definitely buying down here. I'm buying all of these bottoms. Oh, okay, it's down all the way here, of course. I rather buy here than, here. Rather buy here than, let's say, up here. But most people will buy here because the coast looks clear. Oh, and after we broke out of this resistance zone. Oh, here is when the coast looks really clear. Okay, we're breaking out to new all-time highs. It's party time. And you buy in here and you see, a few months of good action where everything just goes up. And then you come back complaining, 17 months later, and can't understand how anyone would be buying up here, down here. I can't understand how you would only, buy the tops when the coast looks clear. Let's say you bought when this broke. Okay, now the coast is clear. We're definitely in a bull market now. I felt like you were in a bull market. I was projecting this kind of movement, and that's how we act as trend followers. Obviously, we popped up above it, and then we had a 2-year correction. So okay, what's the easiest thing you can do to stop yourself from buying high or buying tops? Obviously, that's buying bottoms. I'm obsessed with trying to buy bottoms. I want to be able. I want to look in the mirror and say, yes, I bought the bottom. Nobody can buy lower than me. That's like I think that's actually a pretty good kind of pride to have or something. At least it forces you to actually buy low when nobody else is capable of buying. I think that's something to be actually proud of. Everyone can buy up here. Everyone buys up here when the coast is clear. Nobody buys, these bottoms. And just a quick look at Barrick. Interestingly, this is the major 2016 bottom, major 2008 bottom, which you saw in the GDX and GDXJ. And now we're also we're in a downward channel, and we have an RSI wedge. And here we had downsloping RSI resistance, which coincided with breaking of the channel, and the bull leg was on. And of course here, downsloping resistance. Here we had positive, positive divergence and a coiling action at least. Yes, when it broke, one could say, I guess here. That also marked it broke out of the channel, broke out of the RSI, and we had the best quarter miners have ever had. So you bet your ass I'm looking at this line right here, right now, because that's, possibly even more impressive than this. So yes, I think we will have the next leg will be larger than this leg, I think. No guarantees. And who knows, we might break down first, but obviously, again, it's. You saw it today even. Barrick was positive. So, on a day when gold gets slammed 2%, you see Barrick trying to break out to the upside. If that's not showing strength, then I don't know what is. Again, I think we're simply running out of sellers basically, and some big money perhaps is getting in, preparing for the next leg up, because this is gonna break, and I mean I expect GDX to break to the downside first, so we might actually have, I don't know, maybe Barrick will withstand it and actually don't break it to the downside or whatever. But again, you can't say that these three uh, periods don't rhyme with each other. Major bottom here looks very similar to this. So this is just more fuel to the fire. And again, on the point of like people who, I mean, most people are traders. They tell everyone to buy because something's going up, sell because it's going down, and everyone is scared about price. And you want to wait for the coast is clear. Take Snowline Gold for example. I mean they released a few days ago. They released a discovery hole at their rogue target. Okay, I mean a trader would obviously wait for this to be a confirmed breakout or whatever. But if you had focused in on the value and the next 12 to 24 months in terms of, okay, what's going to happen? Okay, they're going to be starting, drill starting again at the Jupiter zone, and before this we didn't know about if Rogue was a good hit. Now we do, obviously. But I mean, if it's cheap, if you can see that the 12 to 24 month period will have exciting and good news releases, why would you wait for like a confirmed breakout? Why wouldn't you just buy here if you're like, yeah, I'm pretty sure we're miners are gonna have another leg up, and this is a tier 1 target, etc., or tier 1 targets I should say. Why would you like, okay, I'm gonna wait for a breakout? Well, sure, you can say that, okay, well, it went up and down a bit, etc., but I mean, good luck getting in a full position in an illiquid unit, let's say, if you're waiting for the breakout. If you're not fully positioned here, maybe it's like one of these days, maybe tomorrow Snowline opens up 15%. I mean okay, yeah, that's more than I thought actually. Or let's say here, I mean that's a 70% return. If you know something is undervalued and it will very probably go up and break whatever pattern, why would you wait? And why would you get scared shitless down here if you know it's like this is a good target? It's gonna be great. I mean, if you bought down here, you're 150% already. And that's why what I see across the board pretty much. I mean, Elora Mining, it's down 42% since the high. It's like, what has anything net negative happened? No, Iska just keeps increasing. I mean, they're gonna put out a new a maiden resource in Q2. I mean, they're planning to do. Acid labs are very slow still, and that's only for this area. And this could be like well, I'm not gonna say too much of a high. I think it's gonna be higher than 300 million ounces AG equivalent, and that just covers this portion. And they're gonna be and obviously, I mean, this northwest southeast trend. I mean, who knows what's happening down here? I mean, this magnetic inversion survey. I mean, it reaches here. Does this look like the system is ending here? No, and they're putting in drill rigs. I mean, they're gonna drill Central, Porco, and the Porphyry target. So I mean, I think Elora is incredibly cheap based on this alone. I mean, why on earth would I'm gonna, sell it, could go lower. I mean, I think Elora should already be up, well, I don't know, conservatively speaking, I think it should be up around 150% already. So what am I afraid of that I mean, let's say I think it should go something like this already, or it should be here. This is the, like, I know it's gonna reach, well, not guarantee for sure, but I'm very confident it's gonna reach this level. So why would I not get into Elora at all, according to most people? Because okay, the trend is down, so it's gonna go down. Now, okay, one day the sentiment will shift and will revalue, and I can't scramble and wait for, let's say, this what I think is a bull flag to break out. So I'm going to start buying there. Why not buy here if I know it's going to go up there? why not buy, the lower it goes, why not buy more and more, because I know it's undervalued. I mean, that's my, I don't get how that's so hard to grasp. It's like, how, yeah, I don't know. It's just that everyone, again, it's like, yeah, waiting for the confirmation to, oh, coast is clear, or it can go lower. But, well, okay, but I mean, the only time again you're gonna be sure it's, quote, not going lower is when it's in a clear uptrend. And I don't know how much, how much in terms of performance you missed if you're constantly waiting for the, I mean, the breakout, let's say. I mean, you could do good money, and I think, I mean, there are traders that do, relatively well just buying breakouts. But if you can amass a fat position in juniors that for sure, I mean, let's say you're 80% sure they're gonna, go higher, and they should be, 100, 150, 200% higher. How good of a risk reward isn't that? I mean, that's huge margin of safety, and then you add on the fact that we're gonna go in a sentiment high someday. They're gonna go way above that. I mean, today I bought some Cabral because they put out even more good news, and they discovered a third oxide blanket. And that stock has just been forming a downsloping wedge. I mean, why would I not buy when that gets cheaper? I think during the mania of 2011, ounces in Brazil was valued at $100 per ounce. We're not even close to those kind of valuation levels, but those valuation levels will come someday, and they will surpass that with gold going higher one day. So I'm front running all of that sentiment. The next sentiment high, I'm front running. First of all, I'm front running these juniors to reach fair value. Then I'm front running also the next sentiment high, and then I'm also front running, the real bull in gold. And if all those happen, and I'm positioned like I am, I'm gonna make a truck ton of money. I can guarantee you that. Again, here, I mean, this is just, if value is here and price goes down, that's just the price to value gap just goes up. I mean, this opportunity is better than this, and better than that, and better than that, and better than that. And if they keep on growing, so the value curve is actually like this. So this is increasing with price declining. That again, that's an exponential opportunity. That's not a linear one. And you saw that, in Great Bear, for example. I've showed this, many times. Tier one exploration story, sold for 1.9 billion. Probably you're gonna get sold. Look at all these periods of downsloping action. Again, Great Bear was growing here. So the longer, I mean, buying here was better than buying here because the value had probably increased over this period of time. But you're gonna have so many people like, yeah, I'm waiting for the breakout. Take this for example. I mean, how bullish does this look? Flash crash. I'm waiting for the sky is clear. Let's say, okay, you're buying here. Yep, that's a good return, 179. Let's say you're an idiot like me, who catches falling knives, increasingly so. Yeah, 663%. Just think about that. Nobody was buying here because the trade wasn't, quote, working. I'm waiting for better times, let's say. Let's say you start buying here, yeah, that's 68%. But if you knew it was undervalued, you would buy here and had a double that return. And you could wait a long time for a 60% return. I mean, if you average 60% a year, you're gonna be richer than Warren Buffett, obviously. So it's like buying here wasn't not even close to a mistake. Even if I got in here, sure. I mean, yes, but to be able to get a fat position at these levels and then have it revalue. Goliath Resources, great example about what I've also written about stealing value. I mean, they discovered a new extension target. Where are the okay, 1.4 extension 44 AU, 1.6K AG 33 20 13.5. I mean, this looks like another sure bet zone, and I think this has multi-million ounce potential. And they found, let's say, 50% in addition, and the stock hasn't barely moved. They hit 24 out of 24 holes. So again, and a new extension. This was I mean, I don't know what's biggest, the fact that they hit 24 out of 24 holes, including this 1.1 kilometer step out, and that was multiple intervals, or the discovery of a new extension. The stock hasn't moved yet. Didn't move on the news. So again, when the game is rigged against us, where good news isn't priced in, that also means that you can buy value, like the discovery of this and the results of this, for free before it even happened. You didn't even need to take the assay risk. So that's the good and bad part about this sector. If you have dry powder, you can deploy dry powder during a bear leg like this without taking risk. You can just go and look, okay, which companies are increasing their value. Okay, this news release probably increased the value by 30%. Okay, stock hasn't moved. Great, this is going to be one of the best buys I've done. While your obviously previous position, let's say, is rigged against you in the sense that, okay, if news was bad, you would have sold off. So I guess the main point is, yes, it sucks to be fully deployed right now, and I am always fully deployed, but your dry powder will never ever have a better expected return than periods like this, because you can buy a lot of success, a lot of potential success, without taking any risk. You can buy it for free. So those, if you're the buys here in this during these sentiment times are way better than up here. Not only for valuation, but from a risk reward perspective, because you can look at good news and don't pay up for it. Here you will for sure pay up for good news, for sure pay up. Like Gary Baldy's case, I mean, 400 million on hope basically, or speculation. So again, this is why I'm the boy who cried wolf. I'm increasingly bullish because the buys you can, the seeds you can sow today, and how easy you can sow them in terms of not paying for stuff that obviously has value and will get priced in today. You won't see that in a leg up, and that's why that's why I'm actually harping on about this all the time, because it pains me to see people jump in when things are easy, when it appears easy, when the game is rigged in our favor, and sell out when the game looks rigged against us, because this is the best time to be buying. The returns will be better. Again, you can buy positive news without even taking the risk. I mean, let's say a discovery hole has a 3% chance of happening, and you can buy that 3% chance for nothing. Otherwise, you would be 97% sure that you would if you held the stock going into assays, 97% chance that it would go down. And you see the miracle of a discovery hole happening, and you can buy it for nothing. So this is again time to buy. In my opinion, this is the way that it's worked for me, and I don't see. To me, it all makes perfect sense, and that's why I continue with this strategy, because it has worked. Even though I'm fully deployed. And one thing I would say is, like, you can be very active in terms of shuffling. I mean, even though I'm 100% invested, and actually 90% of my capital is locked up in a way in private placement, but I still shuffle. If I have 10 companies, one company or all companies are flat. One company comes out with great news that it doesn't get rewarded. If I like the companies equally much before that, that immediately gets more of my capital. And simply from reshuffling. So I'm pretty much creating future returns without dry powder. I'm just value arbitraging between my positions, let's say. And if you have 10 stocks and 5 are down 3% and one is down 15% on no news, just capitulation selling, a fat finger sell, whatever, that's immediate arbitrage. So I'm picking up 10% without dry powder if I reshuffle a bit. So I'm quite active nowadays. I like this volatility, and I'm very anxious to see what happens if GDX breaks some of these supports. I can expect some juniors, let's say they get flushed out for 20%. I might jump on a specific junior. Let's say if I have a lot in other juniors that are holding up well, and suddenly something went on a 20% sale. When the expected returns go from, I don't know, 150 to 250 all of a sudden or something like that. I'm going to be jumping in because I'm creating future value by stealing value. And even though I don't have more money, my purchasing power comes from the fact that, some other juniors were cheap but not as cheap. So I'm selling the very cheap ones to buy some more of the super cheap one, and that's going to boost my returns without having actual dry powder in place. That's each to his own, obviously. That's my way. And this again became a longer video than I had expected, but I hope the point come across that now it feels like the game is rigged against us, and in some way it is, but the game is going to be rigged for us in the future. And at the same time, now is the best time to be sowing, because you can buy value without taking any risk. So you can pick and choose, and pick up incredible steals basically, which will revalue a lot when we reach the next sentiment high. And they go up to fair value. So I mean, I still hold to my belief that I think my entire portfolio will be up like 200% over the next 24 months. Thanks for listening. Also your due diligence, and I guess a lot of the companies I mentioned are sponsors, and I own some of them. So consider me biased, do your own due diligence, and this is not investing or trading advice. Bye.